Live stream, got it. That is fantastic. Hi everyone, and welcome along to weekly Sunday market update. It's great to have your company today. My name is Paul Bottrell. I'm the founder of Actions to Wealth, and sorry guys, just checking on some settings here. I can get rid of that now. Hey everybody, welcome along. My name is Paul Bottrell. Welcome to your Sunday Market Analyst Show. My name is Paul Bottrell. I'm the founder of Actions to Wealth Online Trading Profits and the Wish Finance Charity Coin. With me today will be the Actions to Wealth team coming in and having a look at this market. You know, Julian, for mine, it's still an awkward market, isn't it? It's just not quite doing the sort of stuff we'd really like it to be doing. More pretty, I'm going to say bizarre. You know, using the crypto space on Friday with the Chinese government calling all crypto transactions illegal. That is going to cause some rocking around. Interesting to see Bitcoin today. There's a live chart on Fusion now. Does do crypto 7 days a week, 24 hours a day. Interesting to see crypto having, you know, last time I had a look, which was only a few hours ago, she was a long way down. She has bounced the heck out of it in the last period of time. I wonder if there's a bit of good news coming in from somewhere. But mate, just a market where no, for want of a better expression, things just aren't what we want it to be. It's just not quite. It's just not quite clean in the way we would love it to be as traders.
No, you're right, Paul. It isn't. And look, I think that's sort of much the pattern everywhere at the moment in quite a few of the markets. Nothing is sort of happening the way you want it to happen. I think some of this is because people aren't sure, and I can understand that. You know, we're in the middle of a pandemic. It's still unfolding in different countries in different ways. You know, some people are angry, some people are sad, a few people are happy, but not a huge amount. You can tell from the way that the protests and everything else is working that right now there's a bit of a mood of pessimism around the place, which is ridiculous because the stock market is trading at an all-time high. There's no reason whatsoever for any pessimism in the financial sense. You know, the market, exactly. Guys, look at this rally. Right, there isn't a market, there isn't a place where you can go to on this chart where you can say that anything other than wow, right? It's just every time the market rallies, it comes back a little and then goes up again and hits a new high. So where are the bulls wrong? So where are the bulls wrong? This is, we're looking at a chart, the NASDAQ here, or if you look at a chart, the S&P, just hold on one second. Oh God, excuse me. So I've been outside too much today.
While you recover, you right there, buddy? Still alive?
Yes, I apologise. I wasn't using the correct methodology. I do apologise, everybody. I will put a mask on. The balance of the
COVID test in the morning, buddy.
Exactly. Yes, PCR test beckons now. So look. Here's the thing, right? The market is the NASDAQ, the S&P. If you look at underlying some of the stocks in the US stock market at the moment, some sectors are trading terribly, right? Interestingly, the big inflation trade, the big reflation, the big growth story trades are all trading really horribly. So all the real companies, okay? The tech companies, different situation altogether. They've been rallying like crazy. So we still got this interplay between the tech market and the real economy and how it keeps swapping backwards and forwards, maybe depending on some of the news. Anyway, here we are looking at the technical picture on the NASDAQ. What's really interesting is that we're on our way for a test to top. So we either make it all the way back up and have a double top and then maybe think about what's going to happen next, or we don't make it that far. So you're on full alert no matter what happens. Where is there a problem? There is clearly a problem if we take out that low at 14,850 or wherever that level is on the NASDAQ, that last intermediate low that we put in place last week. Exactly. Thank you, Paul. 813. There we go. Guys, if we take that out, that is something that hasn't occurred for a very long period of time. Go back on the chart, look it up and find somewhere where it's happened. Maybe in January and February, there was a bit of a moment where it took out some of the previous highs. Okay, and there was still follow through even then before it then finally recovered and came back. There's quite a bit of volatility. That I think was also reflecting that major sell-off in the bond market as well too. Is there a major sell-off in the bond market happening at the moment? Well, Friday wasn't a good day for bonds, but overall no big sell-off. Okay, so the thing is, oh, and by the way, we're also another 20% higher since then, or 15% higher. So here's the thing for me, right? And it's the same in the NASDAQ, it's the same in the S&P, and it's the same to some extent in Ethereum and Bitcoin as well too. I think they're rolling over. Okay, but in the I think they're rolling over camp, I need to have it proved to me. I need to somebody, come to the market with a 2x4, so a piece of wood, knock it on the head and go, no, now you're in a different market state. Because right now, all it looks like is a small correction in a bull market trend. I have different views on, and my broadcast group has had some stock market trades on. The latest one didn't work out too well, but the previous one, I believe, is still running at the moment. And I still maintain a neutral to negative stance on this market. Now, there's a couple of other reasons why I want to do that. Is because when you look at cycles, you look at the time, the seasonality. You also look at how far this market's come for the year. You also look at some of the other fundamentals. The economic fundamentals are really rubbish at the moment. That Citibank Global Surprise Index is moved into negative territory, and the US Citibank Global Surprise Index has been in negative territory for some weeks now. That to me is a big red flag. And so I think you need to be a little bit more cautious about the stock market simply because of that. And it's also come a long way for the year, for the month, for the quarter. For the last 4 years, no matter what number measure you use, the stock market's extraordinarily expensive. So a setback would not be unreasonable. In fact, I think it might even be quite healthy. So we'll see. And that attitude folds out to, or it expands out to not just the US stock markets, but also some of the other ones too. And at the same time, that seems to be generating at the moment in the markets a US dollar bull trade as well too. And that US dollar bull, if we can look at something like the dollar Sing, Paul, if you happen to have that there, the dollar Sing's a good example of that, about how that's trading quite well compared to where it was a few weeks ago. Thank you. And if you look at that chart pattern, that appears, you remember that sentiment cycle thing we were looking at? You can immediately see the higher low formation we put in at the late on in May, and ever since then it's been trading quite constructively. Now, that not to say we again, we don't know what's going to happen next, but that to me looks like a chart that wants to try and go higher somehow. Okay, so yeah, up to about possibly the 138, the 140 area, something. If you go expand out a little bit more, there's more potential room there. So that is a dollar bull trade, a US dollar bull trade, right? And how much damage would it do to that overall chart if it went to 140? Not really. It would be a strong trend, but it wouldn't be. There we go. That's what I'm talking about. That's the point of control, right? Somewhere between 140 and 139 is the point of control, right? So why not head that way? Okay, so just have a think about that, folks, when you're thinking about this stuff. If the stock market does decide to turn around, I suspect that the US dollar will also see some kind of rally as well too. Paul, I think I've been talking for a few minutes and I'm probably done, to be honest with you. That's pretty much it for me. I don't have a huge amount to talk about on the macro side at the moment, mainly because I find it all really boring right now, and I haven't got anything I can tell you guys that you don't already know. There wasn't, I read through the Fed statement, and I understand why people are thinking about them tightening, and I get all of that. But crikey, if they do, I don't think they're going to be raising interest rates anytime soon if they stop buying all these bonds.
Sorry, Julian, finish.
Yeah, so So with the Fed, they have two monetary policy tools, right? One is the amount of money they're putting into the economy through the QE, or whatever you want to call it, the bond buying program, and the second one is interest rates. So tightening together, I think they've learned that lesson that doesn't work very well. They tried that a few years ago. That was a disaster. So they'll either reduce the amount of bonds they buy, or else they will raise interest rates. They won't do both. The market right now is predicting both, which I find utterly insane. But then maybe I'm wrong. I just keep going back to the same old thing again. Look at the level, look at the yield on the 10-year note. It's at what, 135, 138 now? 138 with inflation at 5, right? Somebody's right there. Who's right, the inflation rate or the bond market? My bet's on the bond market. That's it from me, Paul.
Julian, see, this is a dollar index chart. They've got dollar index on Fusion now.
Ah, nice.
It does help, eh? So they've got 24-hour crypto, 7 days a week, and they've got dollar index up, which does help as far as a bit of analysis goes, doesn't it? It's interesting to see where that does go. Thank you very much for that, mate. It is certainly a market which is providing some challenges here and there. I think it's just it's one of those things. You look at a share market chart and you just go, well, a stock market chart. Why haven't I made a fortune on an industry chart? And yet it does. You just keep feeling like an end must come. And maybe we're wrong. Maybe it's just going to continue rolling up. And that does look like a dream chart, doesn't it? Cheers, Julian.
Yeah.
Thank you very much for your input.
It does, Paul, but not the last month. The last month looks like something else is going on. So, so again, folks, when you're looking at the technicals, Paul, could you just go down to a 4 hourly for me?
Yeah. Wow.
Okay, that's fine. So listen, guys, look, key levels are 44.15. It breaks through that. I'm getting a little concerned. And this is on the 4 hourly chart now. Okay, we just go down and look at some technical levels. I don't know if anybody will cover these later on, so I'll just do these. That to me is a worry. It's a bit of a support and a bit of a resistance on the way up and down. It seems to be a point of control. We start to trade below that level 44.15 area. I think I would be concerned. Okay, so bearish below, bullish above for the time being on the 4 hourly chart. So just remember what that is, right? It's a 4 hourly chart. And again, we see that level break. I think I'd be more inclined to think about more short positions. Sorry, I just thought I wanted to point that out to you guys, Paul. That definitely is me done now.
Cheers, actually, Julian, I wanted to just try the daily chart for a second, if you don't mind. One of the things you're talking about, which I really liked, right, is people here keep talking about, are we going to get a lower high? And look, the truth is that at some times in this rally, we have seen lower highs, right? But what we haven't seen is lower lows. Not really. And you comment here that this is the key, the absolute key level, right? We put in a lower low here, and it's a different game. We haven't seen this for some time. We can look for a higher high and a double top and all the rest of it. But you take out that low, it's like Bitcoin. Take out the low, and there's problems. I thought it was really interesting, Julian. Thank you very much for it, and we'll keep an eye on those 4 hour levels as well. Rightio, so from the macro overview from Julian, thank you very much. I know it's 11:15 at night in New Zealand, so thank you very much for hanging around for Steve. We've got a big day tomorrow, so I really appreciate it. We will shuffle the time next week because of daylight savings when Australia joins us on the daylight savings. Next time we've got Alexis to talk about fundamentals. Lexi, you with us?
Hi, everyone. Yes, hi.
Hey, Lexi.
Hi. All right, so that was a really interesting, I think the focus really is on the US and the US dollar, and I've got a couple of articles. I'm just going to flash a couple of headlines, to start off with, and I kind of think that it will be interesting. It will be interesting in the US dollar next week. Very simply is a couple of articles that has just come up just yesterday, today, whatever has been filtering through the media. So we have a little bit of unhappiness with the US government because of the very high debt. We have worries about this actually was written, I think, 2 days ago. Janet Yellen was warning of a possible October default on US debt. We have over here, articles coming out about how the taper tantrum is sparking a bond bloodbath, and again, the focus is really on US debt. So I think the question mark is we have we are in kind of a period where the US is kind of too big to fail, right? Because if the US goes down, it will bring everybody else with it. So the question is, what are the measures in the next 2 to 3 weeks, that the government will do to kind of solve this issue, find a solution, or at least try to convince investors that this is not going to happen, this will never happen, etc. So I think we are probably looking at a more sentiment play next week where I think it's a 50-50 where there are a bunch of traders who feel that the US is too big to fail, where governments will have to step up to not allow the US dollar to crash. But then when we look at the technical parts, when we look at the charts, when we look at what the actual story is telling us, it is a question mark because as of, I think I've got an article here in terms of how much how much the US actually owes its debtors, which is now Japan and China. So I think the sentiment is really on, I think, US debt in that sense. It's now about 107.6% of GDP. If we look a little bit close up on how the debt has grown in the last, let's say, 25 years. All right, this is a 25-year bar chart. The debt has been higher than ever. Okay, it has not gone down at all since a short dip in 2015, right? And I think there's a lot of worry that, what happens if the US defaults or the US cannot pay their debt. So I agree with Julian in the sense that I think it's very difficult for the US to increase its interest rates anytime soon. And I think they have bigger problems in the basket in that sense. So when we look at the US dollar, my question then is, are we reaching at possible technical levels where there might be potential shorts? And the first 2 weeks, or moving forward, the next 2 weeks, it will be more of a sentiment play where we have retail traders and we have smaller traders coming in and starting to do that knee-jerk reaction that, they look at the news article and say, oh, US dollars might go into debt, we should sell the dollar, or, that kind of knee-jerk reaction. But the question is, what I'm really interested to know is, what is the solution to this, and what the US government will actually come up to kind of assure that this will not happen. I mean, it is in the news, and I'm pretty sure that they won't release it in the news unless there's something in the works, right? Because if not, it will kind of create a waterfall. We will probably reach like a waterfall panic situation unless they haven't really learned their lessons since 2008, right? So my question is, what are the levels that we should kind of look out for? We can, like what Geoff does, trade short to trade long. And what I am potentially looking out for the next 2 weeks is possible shorts, but long term, I still am a little bit bullish the dollar. All right, mainly, very simply, is all things in tune, right? The current debt, the current reserve currency is still the USD, right? The current most tradable currency is still the USD. So unless it's confirmed something drastic happens, right? How there is going to be a flaw, and I am going to try to see if we can kind of go down to the floor and then pick it up from there. So when I look at Julian's S&P, and that lower low has appeared, and this is on a weekly. Let's go to just a daily. We don't need such a long view on this. So when the lower low has started to appear over here, right, it is a question then, what happens then when this sentimental news that's coming up, will it be able to do that? It's done that break and retest. So this is a technical move already. And what's going to happen if it does find resistance over here and hit towards the downside? How would that affect our USD, and how will we be able to pick up further short positions on the USD before finding that flaw, to wait for news that comes up and says, okay, the US has got it sorted, they have fixed their debt problem, or they have a solution to it in that sense. All right. So I think next week will be really interesting. We will probably see a lot of consolidation and a bit more volatility in the USD, mainly because if you are nearing the year end, it's already the last quarter of the year. Hedge fund managers or fund managers that are holding to stock portfolios, they are going to be doing something to kind of make sure, number one, their profits they've earned so far is safe, or they want to take profits, or they need to start to get ready for their accounting for the end of the year in terms of their investment reporting, right? So I feel that the next couple of months will be interesting as the big boys are fighting to decide where this is going. And the moment that first trigger is pulled, I think we are going to see a domino effect. Everybody else is going to follow. The human sentiment is going to follow. So I am looking for more of a sentiment play in the next couple of weeks. So I'm looking to short the dollar first until something comes out in the US that says anything otherwise, right? But all in all, it doesn't look like the US is having a good time in this period. A lot of stuff is going on there. But what do I short the dollar against? Well, for now, I'm going to avoid the euro until Germany finishes its elections. All right, very uncertain elections are progressing. We don't know who is going to take charge after Merkel, and Germany being one of the bigger economies contributing to the euro statistics. I think euro might be a bit flat next week. So other than the euro, I think the USD The USD on the rest of the currencies is probably open for grabs. We have a bit of consolidation that's happening. I am potentially looking for dollar Sing to head back towards the downside a little bit, but dollar Sing it's a little bit slow, right? So taking some time. Dollar CAD is a bit affected by oil, all right? So it's affected by oil play, and we have oil actually peaking, hitting nice highs. That $75 high is almost there. So later on, I would also love to see what Ainslie has to share about, this oil price and how it could affect our dollar CAD as well. So the currencies I am looking more towards is the dollar yen, dollar Swiss, all right? Dollar yen, dollar Swiss, dollar Sing, possibly the dollar Kiwi. There is some consolidation happening. We seem to have, there is kind of a resistance level that is hit. So I'll be looking for potentials of dollar shorts next week on the shorter time frames. And and of course, keeping one eye on the news and seeing what's the solution to their debt issue. So that's all for me this week. Over to you, Paul.
Yes, Alexis, that US dollar news is going to be big news over the next couple of weeks and perhaps early next couple of months, isn't it, Alexis? That is this debt ceiling thing is going to come into play pretty seriously over the next period of time. So thank you very much for that. We will go. We've had a little bit of a macro overview from Julian. We've had some interesting fundamental stuff from Alexis. And now let's have a look at the data with Ash. What's the data telling us this week, Ash?
Oh, it's quite fascinating, actually, potentially we can get right out in front from what the data is telling us. I want to bring everybody's attention mainly to the Aussie again. We haven't really seen the Aussie take flight as yet, which would be in accordance to the COT data. But let's see if we can get a few things to line up. But if you look along here, this is what I want to bring everybody's gaze to. You look along here, we see 100% positive in the positive area on the index, on the 3 year, the 1.5 year, and the 6 month for the Aussie dollar. Shorts increased a little bit last week, so it's not really kind of giving us a timing tool necessarily, but it's certainly saying that the commercial traders at this current stage are building up Aussie positions. And if we go now down to the dollar, then we will have a look and see 24 isn't quite low enough on the 3 year. We'd really want to see that under 20. So when that tips down just a little bit more, then that would be a really good signal for us to suggest that the commercial traders really are coming out of supporting the dollar. On the 1.5 year, we got 0, so it's right down the bottom. So that's a short signal. And on the 6 month, it's at 0. So that's also in the near term a short signal. When we look at the commercial percentage change from last week, which we looked at earlier on with the Aussie, not a massive difference, 8% to 12%. So at 8% increased their long positions, but 12% increased their short positions. Not a huge difference. If we come down to the dollar, negative 30% on the long positions. So it's not that they're going short, but the percentage change was there are less. There's less interest in buying up the dollar from last week. Short positions increased theirs by only 1%. So not necessarily sort of saying right now is the time to get bearish the dollar, but it suggests that either the buying positions are there's enough buying positions in the market already, and they're quite happy to hold on to positions and not add to any more. Now, if we bring in the seasonal indicators of this is where things start to get really fascinating. So looking at the Aussie, actually, let's look at the dollar first. Dollar first, what we're seeing here is that the dollar tends to rally up till around about the start of October, take a bit of a dip, and then rally up again to around about the middle of November before taking a big dip right the way through to February. Now, the dollar index is made up mostly by the euro. So when you look at the basket of currencies, it's not absolutely evenly spread between all of them. And the point of saying that is that just because the dollar looks like a long, it doesn't necessarily mean that if the Aussie also looks like a long, that we have got mixed signals. It just means that the dollar against mainly the euro tends to be quite positive here. Yes, the other currencies are part of the calculation, but they make up a much less. They make up much less weight on the dollar index. So this suggests the dollar index is likely to kind of hit the brakes around about November time before starting to come down. If we look at the Aussie also suggests that we would potentially sell off into October. So that the seasonals are saying that we don't agree with the COT data right now. We're not saying that the timing for the seasonal bias to kick in is yet, but sometime in October, it does kick in, and it kicks in right the way up until November before it gets a little bit sticky. Now, the reason that, as I say, this starts to become fascinating is then we start to switch to our technical charts. And if we switch the technical chart over to the Aussie dollar, what we have here is a pattern. This looks like a pretty good level of support down here. And this is one of my favorite patterns. It's the head and shoulders pattern. And we can see that if we were to, what's great about analyzing head and shoulders is that when you get kind of somewhere around equal length of time between the left shoulder and the right shoulder. So if you were to draw a shape on the left shoulder here, what you'd be looking for is the right shoulder to be around about the same size. And that may start to give us an idea of when this one could start to rally. So if we have a look at this, this is, I did this one earlier on. So you've got a left shoulder here, a right shoulder here, and this would be the end of it. Now, what we'd expect from this is that the Aussie dollar would continue to weaken somewhere into this region, which is around about the 0.7 level. And then possibly start to mess around about here, but we'd be looking for the rally sometime around about the end of October. If we bring this back here into a daily, then we'd see that this would actually be going into, actually goes into around about November, which starts to become interesting because that would also push into when that dollar index starts to weaken. So somewhere in this period, now it's not going to be absolutely perfectly aligned with the left shoulder, and this left shoulder may be, it may be that needs tidying up a little bit. You know, it might not be exactly this amount of bars where that left shoulder started, but it's somewhere in that region, somewhere around there. In actual fact, this looks a bit big. So let me just get rid of this a second and copy it again. And all I've done is I've taken exactly the same size, brought it over to where around about that left shoulder begins. It's actually here. Now this says that that's going to be the end of October, 25th of October to be exact. That would give us pretty much the same size left shoulder and right shoulder. Then if we come back to the seasonal chart, so we're looking at sometime at the end of October, that would suggest, come back to the seasonal charts, then we see with the Aussie, October is the time it starts to really rally. So I want to see the technical picture line up, and sometime in October, as I say, it might be, you know, give or take around about the middle week, depending on what the COT data still suggests and the seasonal suggests, that we could be looking at technical analysis to give us a buy signal on the Aussie dollar. Not there yet, interestingly, but if it does come sometime, you know, in this next month, that would start to fit with the commercials, and it would start to fit with the seasonal patterns as well. So Aussie dollar for the next month, being on the lookout for the Aussie dollar in the next month, mate, is what the COT and the seasonals are starting to suggest.
Well, I really like that. I was, I remember at the very start of my trading journey, I used to sit around with Leon in Denmark, and you guys know Leon's now chief analyst for a major European bank. They trade hundreds of billions of dollars, and he used to say to me all the time, he used to say that the problem with retail traders is the trading in the dark. And I used to sit there and nod, go, oh yeah, got it, yeah, they're trading in the dark, they've got it. And I had no idea what he was talking about, right? But I didn't tell that to him. I was not an idiot and anything. And the last three sessions that we've just done, this is the stuff that retail traders don't have as far as the light switch goes. That's the macro market overview. That's the understanding of fundamentals. It's about understanding what the data is telling them. This is the stuff that puts them back in the game of the professionals. Right? This is the stuff that goes, oh, hell, I was looking at doing this, and actually this stuff tells me I'm wrong, and I've got to wait for this opportunity. And these are the things that can give retail traders a chance to get back and trade in the light. Or you can turn your light switch on, whichever one works best for you guys. But I think that this kind of stuff is really insightful. I like the hidden shot. You know me, Ash. I'm not one of the things that's part of being a trading team, right, is that there are people in our organization that use all kinds of indicators that I'd never use. And that I'm not a big fan of Head and Shoulders. For me, Head and Shoulders tell you when something's going to happen. What's going to happen perhaps comes a little bit, it becomes clearer as it unfolds. I think people go into Head and Shoulders with an expectation of direction. I'm not sure that's always what the Head and Shoulders tells you, but you use it and you use it really well. And that's what trading is, right? You find your tools and you use it really well. And I was really interested in that timing thing. So I'll be keeping a bit of an eye on my Head and Shoulders and seeing if I can do a little bit of that kind of stuff with the boxes and get some dates, because these are the things, again, 99% of retail traders are early on every move. They go before the pros, and the pros have got these things that hold them up. And if that's one of the things that hold you up, actually, as well with the lens. So thank you very much for the insight, mate. Really interesting stuff, and we will keep a really close eye on it. So cheers, mate. Having had a look at the macro and the fundamentals and the data, we're now going to start and get directly into products. And first up, we're going to start and have a look at oil with gold. With oil with gold. We have with gold with Ainslie. Ainslie,
how are
what's
you?
the gold market been like? Good, thanks. I'm in Papamoa Beach on a family holiday. Sunday night, driving home tomorrow.
Very nice. Oh,
Sun even came out yesterday. Stayed out for a whole day.
A holiday is a good thing in lockdown. That helps.
Yeah, we're not quite in lockdown where I am, to be honest. We're a bit lucky, really. We are a bit lucky, really. But yeah. And on the bright side, Angie, while you're in lockdown, you're not in a Melbourne lockdown, right?
We're not in a Melbourne lockdown, but we're coming out of our lockdown because our vaccination rate has been quite remarkable. We were off to a bit of a sluggish start, but we're bringing it home in spades, I've got to tell you.
Is that why everybody in Sydney went to the beach today? Is it because you're coming out of lockdown, so everyone thought I'd just go to the beach for the day, go to Bondi, have a little party?
Oh, Bondi, they actually, you're allowed to picnic in groups of 5. Yes. The only problem was they couldn't tell where some of the groups of 5 stopped and the next one started. It was absolutely heaving down there on a Friday night. But look,
let's go back to gold, Ainslie.
Well, I'll just add on that, and just to link into what Ash has just finished saying, we're coming out of lockdown, and a rally in the Australian dollar with the economy opening up is probably another fundamental feather in the cap just to keep in mind.
When are you coming out, Ainslie? It'll be interesting as well, because I think we had a bit of talk about dollar Sing, and Sing is going back into lockdown. Another month, I think, for them. When are you guys coming out?
11th of October.
Wow, like seriously coming out?
That is stage 1, and they expect us to be out. That'll be 70% fully vaccinated, because we're at 60% now fully vaccinated in New South Wales, and at 80%, they're opening the borders. I know. I've read about Singapore, but they're doing it in stages, and 11th of October, they expect us to be at 80%. That's 16 years and older. They expect us to be out the following week or so. I
like the approach, Ainslie, and just because Singapore is highly vaccinated and they've had to go back in and tighten up some restrictions, and to be fair to them, very, very well equipped to deal with it. It doesn't mean that someone else can't try and do something along similar lines. At the end of the day, we have 2 choices. We either work towards, this is only my opinion, and this is a trading show, so it doesn't matter, but we either work towards a world we want to live in, or we accept the world we live in. And I personally think that a lot of people couldn't live in today's. Let's get on to gold. That's what we're here for. What's happening with gold?
Yeah, I'm just going to grab a chart, just kicked young Ash off. But yeah, either way, let me tell you, it's pretty exciting to think that we're actually coming out either way. But let's have a little look at gold. Has she been behaving like we'd expect to? Not really. We've had FOMC this last week, and then we've just not gone anywhere fast. I had hoped that we'd see a bit of upside movement, but we just didn't get that. Thursday morning FOMC is down, but what we're just going to have to be patient for. And I still think we are going to see a little bit more of a push up in gold into about the first week and a half of October, which is a seasonal buy. But let's listen and stay really tuned with what's happening with the US dollar. The US dollar. It's meant to be, look, and I heard, and I keep hearing it, and Alexia, that's my daughter, Alexis has said that, is it too big to fail? Is it going to be propped up? Are we just going to push on through? All the rest of it. These are things that we're just going to have to take into consideration to see what will happen with gold as it reacts to the US dollar. What we had here also in FOMC, we also had an increase in the Treasury bond yields. They sort of skipped away the US Treasury bond yields. When they go up, gold goes down, and it's all pretty ugly. And as you can see, it came down pretty hard during this last week because the bond yields accelerated. But to be honest, I just haven't got. We've got it sitting down here. We haven't got a strong move down that we thought that we might have had down here to the 17 level if all belts were off. I don't think we'd hit the 1750 mark, but boy, did we come screaming into that. And look, there we did. But we bounced pretty quickly, and we've just sort of hovered around there, closing during the week at 1750. So obviously we know that there's a really strong level of support in through there at 1750. Where to next is all going to be dependent on the mighty US dollar and where it will go to from there. I just need to move fairly carefully here because looking at the chart, obviously, and looking at it on a daily and on a weekly, monthly, and even on the 4-hourly, it does look like we're in succession for a downtrend because we have very neatly 3 lower highs, lower lows and lower highs. And by definition, that is a downtrend. Are we going to just peak out here? Are we going to stabilize at 1750 mark around here? Don't know. Can't tell you. Let's see what happens with the US dollar. Let's see where we go to. Seasonally, post-election year, we should be looking for a bit of a push up anyway on a seasonality into the first week or two of October, but then we go into a bit of chop. And if we start to listen to what has happened previously, we will be looking at chop and a downhill slide back down to when I'm looking for a turnaround later on in the year. So we've got a bit of ups and downs coming. And we all know that you can see it's just gold hasn't performed particularly well this time, but that's where we've got a lot coming down the line with the US dollar, and gold hopefully will be a nice safe haven.
Cheers for that, Ainslie. Thank you very much. Yes, hopefully. Gosh, still just patiently waiting for gold to go back and be gold and just give us a nice run at some point. It does tend to range and then bang out. So if that's the range has been going for long enough, it's going to bang out. When it does go, you get the feeling it's going to go a fairly long way in one direction or the other.
Hopefully.
Next up, we have got Shukri to talk cryptocurrency straight off his first WISH members education day. They made it's all over, right? China's banned crypto. The world's finished. The sky's falling on our head, as they would say in that New Zealand book about Tana Mahuta. Is the world falling on our head, Shukri? Is it going to be okay?
No, it came back. This is funny. It's good that we have this session at 6:40 because if this session was at 4, I'd probably say the world is over. And it comes back. But that's what Bitcoin. I'm going to tell you why that a lot of whales or a lot of big people who have Bitcoin like me, I'm just not convinced that there's a correction here. Okay, we had China again, now banning crypto outright. All businesses are there, but the golden cross is still intact. And look what happened. This happened like 1 hour ago. It just came back. Like, what's happening here? And I'll tell you why, the bigger picture. But look at this. Ethereum came back. Okay, BNB got dumped, climbing up again. Not as bad, not as good as the others. The market leader now is actually AVAX. You guys should know, right? I mean, don't look at Ethereum, look at AVAX to look at the conditions of the market. This is good. So we're blasting up again. But why is this Bitcoin so resilient? Let me explain to you why. First, look at this person. This is the guy from Bloomberg, Eric Balchunas. Okay, he's an author. He does all the analysis on ETFs in Bloomberg, and October is going to be such a critical month for Bitcoin, make or break. And I'll show you the dates. And anyone, including me, is like, do I want to sell now? No, I'll just hold it. because guess what? Look at this. Bitcoin futures ETF are about halfway to 75 days. This is the day the SEC has to decide. 1, 2, 3, 4, 5. Okay, you have ProShares, Invesco, Van Eck, Valkyrie, and I don't know about, I know ProShares, very famous. I may have heard about Invesco. I know Van Eck because they are the gold miners index, right? GDX. I know Valkyrie. I know Galaxy. This is Mark Novogratz. I have not seen Cathy Wood. So with Cathy Wood, there's 6. Don't tell me all will be rejected. I'm betting one will go through, okay? And so it's like everyone's like, okay, we're not going to do anything here. We're not going to do anything with this China FUD, okay? But this is what's happening, right? It's like, yeah, 40 Act Bitcoin futures, because Canada has approved so many, these guys have not. So while Bitcoin is doing this, let's look at the DeFi. Well, they've even
hold
said,
on a second. Hold on a second. Sorry, let's go back. Let's go back.
yeah, this one.
So the SEC is going to approve a Bitcoin ETF, maybe 5 of them.
Yes,
Or,
I don't think all 5, but definitely 1 or 2. If not, it's just going to be delayed, and then the day of reckoning.
Why
will
is
be
that good
December.
news? Why is
Because
that good
a
news?
Bitcoin ETF will bring money in, because the ETF, whether it's a futures, some of it is a futures, some of it they will have to buy the ETF, will finally bring in the liquidity, because let's face it, not everyone wants to buy Bitcoin. Not everyone wants to have a wallet.
Yeah, so what you're saying is that for conventional investors, they
Yes.
know how to buy these things.
Yes.
They've got billions of dollars and they are
Yes.
not going to go to Binance and MetaMask and do all that crap that takes days and is
No,
really
they
hard.
do not.
They're
They
going
do
to buy
not.
these things. And to be honest, I reckon it'll take me 45 minutes after it launches. I'll
Yeah.
have a chunk of one of these.
Yeah, I
Because I
know.
can just go to my account and go, boom, boom, I want one of those, you know?
Correct,
Yeah, I get
correct.
that. No, thanks.
And
Good
it's
point made,
regulated.
Shukri. I like that. Okay, back
So
back to
guys,
you, mate.
please take a snapshot of these pictures. Because if it's not, I don't know, if it's not done till 25, you still have this, right? The Cathy Wood and the Galaxy. This is Mike Novogratz, okay? So just take note of that. Now the DeFis have also come back. Look at that. YFI, Maker, Moonriver. Look at DYDX, the airdrop. It's just returned again. So that's it from the crypto land. Again, as I said, there's going to be a lot of FUD until now. I was hoping the drop that we saw this weekend came in early October, but it's come early. Because, I'm always worried when things are bullish in October. October is not so a good month, but hey, maybe it's different. And this hype towards the ETF is going to support Bitcoin. After that, we don't know. If all 6 are not approved, I don't know, Paul. Maybe that's the end of the world. If Cathy Wood is not approved, okay, we got the message.
What's FUD?
FUD, a fear, uncertainty, doubt. And here's what happened to crypto all after the China FUD. Again, look, guys, look. This is December 2013. It went up this much after the FUD. September 17th, it went up this much after the FUD. Now, if I take this, is 484%. No, it's 4.84 times. If we calculate from 40 after this China FUD, Bitcoin should end up around 100 to 106,000. If you use this ratio.
Numbers keep turning up, don't they? Well, it's one of the things, Shukri, isn't it, that part of being a serious cryptocurrency investor is you've just got to be able to deal with the FUD.
Yes.
And, and the risk of that is you get it wrong and you get smashed. But if you don't get it wrong, you don't get smashed, just smash it. And then other 2 options on the table long term if you hold stuff, right?
Yeah, correct. That's why it's so hard to hodl these things. I mean, I was in a class today, right? I told them that I've even adjusted. I haven't sold all my DYDX, okay? If I sell all today, I'll be at 93K, which is good. But I want to make it 100K. I want to put in my mind here that now big airdrops are worth 100,000 US. This is beyond my thinking, because my thinking before this was 3, 10, and 20. And 20 happens every 1 to 4 years. But I'm glad I didn't sell. And because
Look,
it
mate,
came out.
If it pulls down and it's only worth $70,000 or $80,000 and you think, look, it's just not worth the trouble, just send them over to me and I'll cash them in. I'll cash something like that for you, buddy. I will take care of you. I feel sorry for you if you only make 70 grand out of your free coins.
And you'll buy a Bitcoin ETF with that, right?
Yes, we'll put it in a BT. That's exactly what we'll do with it.
Okay,
Cheers, Shukri. Thank you very much, mate. Fun and interesting as always, Shukri. Thank you very much for that. Rightio, let's go back to Ainslie and talk about black gold now. Let's talk oil, Ainslie. Decent rally this week.
Yay, finally. It's been far more exciting than Jolly Gold, hasn't it? That's for sure. But what we did talk about last week, Paul, was she was sitting up here and we said, wait for the pullback. I was expecting that we would see a bit of a retracement because that's typically the way oil will move. And lo and behold, we got a nice little pullback, 3 bars. Excuse me, 3 bars. Beautiful bounce off the 50 EMA here on the daily chart, followed by a ring low and then an entry for you to go long. Down here on the 4 hourly, if you drill down a little bit further, a safe place would have been just above the weekly pivot, or again here you have another test, retest. Oil tends to do this. It loves a nice little retest before it takes off. Fundamentally, where we're looking at now, we have one of the reasons we've got this continued push up is continued disruptions to the supply side. It's not necessarily the demand side, it's just definitely the supply side. So we still have a few issues with Hurricane Ida. There, when it went through the Gulf of Mexico, you had something at around 90% of supply interrupted. So that all still hasn't come online. Add in Canada's oil export to its largest customer, i.e. the US, and it's had a few issues as well. So all of that, they've bitten into the supply chain, or into the stocks. They have gone down a lot further than expected. OPEC is playing ball. OPEC plus countries are all playing ball and playing nicely and sticking to the regulations, and that's all good and fine and well. And given that the northern hemisphere is going into that chillier time of the year, and look, climate change and global warming aside, if it is a lot colder than we expected, I will see not only, again, once we've hit this level of resistance up here, which we have done neatly, we had a small little pullback on Saturday morning my time, Friday night close of New York time. Hey, is it unusual to see a bit more of again, a small pullback before we keep going? Will we see 75 up to 80 in this next coming week? Yes, I think we will. And that's where I'm looking for with oil, Paul. A bit of a pullback and then a push upwards. I'd like to see the triple digits though, although I think that will play havoc with opening economies and recovering economies and those things that have long wingspans. That'll be
recent highs in the picture, Ainslie.
Yeah, so the recent high was up here, where actually closed, was up around 76. It did get to 77. Oh, and Geoff and I have this little, he predicted 77 and it didn't quite got there. It got to 76.94.
Oh, Jeffrey. Come on, Jeffrey.
I know. He did refer to an anatomy of a bee distance being involved. But yeah, so that's where we're looking for. It's going to come up and retest this level once it gets on its legs. And let's see if we get to, and once we've broken that, I don't want to end up with it is quite possible, a double top situation. But, you know, if we break that level in through there, I think we're off to the races.
Yeah, that 95 starts to come into 93, 95 stuff starts to come into the picture pretty quickly, doesn't it?
Yep, pretty quickly. You look at these supply. I mean, and that's the thing, when you have a hurricane go through and totally disrupt these big oil rigs, they're not going to just come back online because maintenance guy went out there and a few things are fixed. It's like it takes a couple of months to get these guys back at these big rigs and or anything that's been destroyed back online. So it's not a quick, and it's the same like, you know, oh, there's an oversupply, we'll just go turn it off the rig. That can't happen either. So yeah, 76, here we come. And then we get a break at that 76 level, onwards and upwards. And a cold winter.
Let's hope for it, eh?
Cold winter as well.
Yep, a cold. We are wishing the Europeans a cold winter, and we have a warm summer down here. I'm okay with that. I mean, a warm summer in New Zealand is better than a warm summer in Sydney. I've got a feeling, and a warm summer in New Zealand is 23, 24 degrees. You go back in the 40s if you get a hot summer.
Well, we do warm. We do warm.
Yeah, Bondi even crazier. Cheers, everybody. Thank you much for that. Ainsley, always good to have a look at the gold and oil perspectives from you, and some quite optimistic news there from mine. Quite looking forward to having a look at those on Monday and see what we're going to do with them. Next up, we're going to have Lloyd back in the show. He's going to be coming in by recording for this week. I think we might have him back live next week. He's been away some family stuff for about a month. So Currency Strength Index and next. Mai, ready to play that for us?
Hi, afternoon, everyone. So today I'll be going through the currency indices and see what sort of picture you'll be painting for us. Right, the first one off the list will be the Swiss currency index. It seems that it might have a good chance to actually rise up to 110 before resuming its dominant downtrend. Yeah, so this might be a play for the intraday traders. Sure, we can actually make use of this. Next on my list is actually the dollar index. Now, dollar index is not so straightforward because price is actually on the pretty good, pretty strong horizontal level. But what jumps out is that it has already given us a higher low. Yeah. So for this upcoming week ahead, probably Monday or Tuesday, I'll wait for price to see if it breaks this level. If it does, then I'll be in for a uptrend. Canadian index, the analysis is slightly weaker than the XY. Yeah, but it is of similar fate to the Swiss index in the sense that it does seem to have some space to actually go back to 80 before resuming its dominant downtrend. Yeah, so again, this is more of a play for the intraday traders, not for the swing traders. Now for yen, it seems to be reaching back down to 90. We don't have much space to actually play about. As such, I'll not be trading yen much in the upcoming week ahead. Now, the British pound is actually on the same page as the XY. Yeah, in the sense that it is actually on a currency, it's on a pretty good horizontal level. So in the upcoming Tuesday or Monday, I'll be seeing if price actually respect this level. If it does, then it'll be poised for actually a pretty good downtrend ride. Yeah, so this any currency that is paired with British pound, then I'll be shorting it all the way down to see if that's a possible move. Euro index, similar story as British pound. Yeah, again, both of these usually is pretty much correlated. I'll see if price actually respect this level. If it does, then I'll be in for a good short trade. New Zealand index, again, the dominant direction is actually downtrend. Yeah, we can actually draw a channel here, but I can't just ignore 70 level. Yeah, but on saying that, I'll be seeing that again Monday, Tuesday, if price actually clears this level. If it does, then I'll be shorting this pair if any sets up. And the last on my list, which is actually the weakest, would be the Australian index. Yeah, as it is, we can see that I think this channel is already irrelevant. Yeah, so price is pretty much on the downtrend for the past 2 months already. Yeah, so previously it was in range, broke out, retest, so now it seems to be on its merry way down to 70. Yeah, and doesn't really have any strong horizontal level amount. So this will be the weakest pair that I'll be trying to trade throughout the week. So off the top of my head, I'll be shorting Aussie dollar and Kiwi Swiss. Yep, so that's all for today. Hopefully we get some setups for the upcoming week ahead. Goodbye.
Cheers for that, Lloyd. And now let's look at the technicians' 2 cents worth and hear from Geoff's technical view of the markets. Mike, can you play his recording as well, please? So this is the technical overview from
Paul
Geoff. Cheers,
and
guys.
Heidi Ho, everyone. Let's see if we can get at least 2 cents worth out of this week's gallery. I'm going to start this week with euro dollar, not because it is a game changer bar, which is exactly what I'm looking for at this time of the week, but because it is in or at, if you like, the bottom of this range that I've depicted here, the immediate range, which only goes back, or what are we on, weekly chart? A couple of months, really, maybe 3 months, but we've been in it for that long, and I am looking for a bounce off the bottom of that range this coming week. Now, as far as trading that's concerned, I don't really see anything that enthuses me at the moment. The weekly pivot, of course, will move, but the monthly pivot will remain where it is, and maybe that's due for a retest. But there you can see that range that I'm talking about. So I'm probably looking for bounce maybe where the weekly pivot was. Actually, it won't move too far. And then a bounce back down here, give me a higher low, and then I can look to trade it up, taking profit before the monthly pivot. That is the first one that I want to look at this week. The second is CAD Swiss. Now on the weekly charts, which is the one that we look at, I do have that game changer bar sitting there, and again quite clearly similar to euro dollar, we have bounced off the bottom of that range. The difference being that we've gone straight to the top of it, which makes it really difficult to actually jump into the market right now. But on the bigger picture, what I do see is this descending channel. Okay, it's not perfect, but we do have two highs that are equal, if you like, sort of descendingly equal, if that's the thing. And of course, we've got three lows that are in a similar vein on the opposite side of the spectrum. But the bigger picture here is showing me something quite clear. And that clarity comes around this going back to 2015, where we had that big decoupling of the euro and the Swissy. Since then, this has been in a range for all of that time, bar there. And not sure how long, what I'm on a monthly chart, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Couldn't even last the year out beneath that level. We're back in it, and we have retested the bottom of it. So the bottom of that box, if you like, coinciding with the bottom of the descending channel. And indeed, if I go a little bit wider, you can see where that trend line comes from. There is a confluence with that one there as well. So I think this is a strong buying area. And the question is, when do we buy, of course? I think we're of a little bit of a problem area right now, but the candle's suggesting to me that we're going, and we'll probably go fairly soon. So yeah, good luck with the timing on that one. Perhaps you could play it as on the daily chart, something like this. A break, take out that high, retest the trend line, and then go. Obviously, you want to be taking profit in strategic areas, and that would be the way to go for me. But I think this has got real potential if it does break that level there, of, as I say, going in very slow doses perhaps, but right back up to what is that level, and I'll work out how many pips that are probably available for us. So we got in the market now, potentially there's about 500 pips available for us, and I think you can get in off a fairly small number of pips as well. So it could be at 8, 10 to 1 if it does come off. That is CAD Swiss. Now pound CAD is the next. Pound CAD on the weekly chart is similar in that we have a clear range here as far as I'm concerned, and price above this 176.50 odd level does not seem to be appealing to the market. Once again, we've attempted to break it and failed, and put in a lower high with last week's candle, which of course is extremely dominant, and speaks to me that we are going to potentially get back down to the bottom or near the bottom of this range. Now, probably pretty tough to trade that at the moment where it is, because we are at a support level, but I think a pullback to the monthly pivot does make sense to me on pretty much any time frame. So daily, weekly, it looks pretty toppy to me, and a lower high here is definitely something that I would be looking to pursue. That's pound CAD. Now there are two more that I was looking at. Sorry, one more I was looking at. Pound Kiwi is the other. Now pound Kiwi I am indeed already trading and have been for quite some time. Just got to find the chart. There it is. And I'm in drawdown. Now it's at a very, very interesting stage for me. If I look at the bigger picture, which is the monthly chart, we have, and we are at, in my humble opinion, a crucial point. This is what I was trying to trade in the first place, break and retests as we came back into that ascending channel. Well, since then, really what's happened is a higher high, higher low, higher high. Potentially this is the next higher low on the monthly chart. Weekly is a little bit indecisive on that, and perhaps you'd be thinking that where I've got my stop loss is potentially attractive to the market, and I'd have to agree with you. That does look to be a possibility. That said, We do have an untested monthly pivot up here as we get near to the end of the month, and I suspect that may be a little target, short-term target, if only, for the bulls here. Now, pound is a little bit weak, I've got to say, or has been a little bit weak. Kiwi has been on a tear until the last week really, and it did come off its highs. So the relative strength here is a little bit questionable, but I'm in favour of the pound over the Kiwi, and I do think this can go long, and indeed I think this could be tradable as it is, where you could put an entry above the bar, stop loss below it, and get your first take profit in the bank before the bottom of that range there, which is around about, say, that level. So you've got about 80 odd pips to pick up on a risk of, that's for TP1 I'm talking about, not total, about 184. So that kind of works for me. It is well and truly over the 1/3 that I require to get into it, so that should do me. So there we go. That is pound Kiwi, looking for a long above that bar, and as I say, get your take profit pretty early in the piece. So for this week, Paul, that is my 2 cents worth.
And worth well more than 2 cents, as always, Jeffrey. Rightio, everybody, thank you very much for joining us today, the 27th of September 2021, for our Market Analyst or TTR show. It's been great to have the team, and thank you very much to Julian for staying up in the middle of the night to help us out with macro market overview, Alexis for bringing us that dollar story and the index and the fundamentals through there, Ash for starting to turn that into some Aussie dollar interest around the data, the hot data and the seasonal data, Ainslie for bringing us in the gold view, and supporting perhaps that the Aussie, we may see some Aussie movement as they come out of lockdown in a couple of weeks. Shukri has always been taking a look at the cryptocurrency. Ainslie back on oil and the new highs starting to come into focus there. Lloyd on currency indexes. One of my favourite sessions. Nice to have him back in. I'm sure it'll take a week or two to really bed that back in, but keep watching that, and then Geoff to give us the technical overview. Thank you to the team for doing a wonderful job. Do enjoy your Sunday evenings. Remember, guys, take your time. Stay calm and make good decisions. And if you do that, you'll walk yourself out over time. Cheers, everybody.